presentation of Financial Crisis Recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
And the financial institution is going to see so that we know exactly how we can strategically position you. And that's what the fall and rise is all about, as well as any corporations incorporated throughout the United States. You may be surprised to find that for about $150, a financial institution can find all that information without your authorization. And that's an 8-hour class called To Fall and Rise Again, Life After Financial Crisis. The next one that I teach is called Buying Within a Budget, which is the concept of creating a comprehensive budget with which to make accurate financial decisions, something I like to term as making decisions from a position of financial accuracy. That's a half-day class, 4 hours. The last one is Strategic Default and the Path Back. This is the 4th class that I teach with them, and this is all about determining if I'm not going to exhaust my retirement account and all my resources because I don't want to continue to throw good money after bad. I know I'm going to begin to miss payments. What's that going to do to me? How's that going to affect me now and in the future? And then most importantly, when it's over, how do I recover and rebuild my life and position myself for future financing in the shortest period of time? That encompasses, in my estimation, what pretty much every consumer out there who's in this position is looking for and killing themselves trying to find that information. Listen, guys, I teach these classes to the professionals, and I do every single week. I'm doing classes with Kaplan Professional Schools. I teach for other organizations as well, but I teach these for Kaplan, and they're available to the general public for a very modest amount of money. So we got Bruce on the phone. I'm going to take Bruce's call here. Bruce, you are on the air with a question I understand about bankruptcy. How can I be of help to you, Bruce?
Hi, Todd. We filed bankruptcy about 3 years ago, and we wanted to refinance on our house, and we went to the bank. They told us that we were not able to refinance because of the bankruptcy on the house. So we decided to maybe start looking for a new house at a lower rate. Our house rate right now is at 5.7%, and we wanted to try to drop our payments down. And we're just kind of wondering if we let the house go as a foreclosure, what happens to our credit score? Does that go back against us because of the BK?
Well, as you have probably listened, this whole particular radio show is about these very topics, and as I just described those classes, the class that immediately comes to mind is Strategic Default and the Path Back, which, as you heard me just say, is positioning for future financing. So when you talk about, number one, if you're going to go through foreclosure, which you should know that, Bruce, it isn't imminent that you have to go through foreclosure. There are alternatives like short sales. There is deed in lieu of foreclosure where you could deed the property back to the bank. So there's a lot of options, and this is kind of part of the problem is when people ask these questions, they believe that the question is fairly simple and straightforward, and there's 2 simple answers, and that's all they need. And the complexity is significant, and that isn't just to dissuade the answer to your question. It is simply to say that there's always implications, and there may be a whole lot more options than what you think there are, and it's hard to explain because a person simply doesn't know what they don't know.
Right.
Your bankruptcy, when you say how long does it take to recover, meaning in this particular case, how long does it take to qualify for refinancing, there are specific guidelines related to things like bankruptcy and short sale and foreclosure and all these things. And these things are specifically unique in so much as it's not really about your credit. It's about that particular issue. So in other words, it wouldn't matter if you had an 800 credit score. If the underwriting guidelines related to financing say that you cannot get a loan for 2 years from the discharge date of your bankruptcy, which is typically under the FHA guidelines, 2 years, 24 months from the discharge date of a bankruptcy. Now, mind you, if you do a Chapter 7, you're going to have discharge probably from the time you file within 3 to 4 months if your bankruptcy goes well and is conducted quickly. If you're in a Chapter 13 repayment plan, that's an entirely different proposition. You're now in a payment plan for 5 years under a Chapter 13. Your payment has to be agreed upon by the U.S. trustee. And yes, you could get financing within 12 months or maybe 24 months of the successful payment of a Chapter 13. However, your lender may have specific guidelines that go beyond and outside the standardized guidelines, and your U.S. trustee may say, no, I'm not going to let you refinance the house. And the interesting thing is, if you were in a payment plan in bankruptcy, if you lowered your payment, whatever you lowered it by, the additional money that you just freed up in cash flow, the trustee could simply increase your payment plan by that amount of money, and you would glean none of the additional cash flow by refinancing your house. So a lot of questions to be answered. The other issue is that foreclosure starts the timeline all over again, as I just described, those deal breakers. So look, let's say if bankruptcy is 2 years, let's say that short sale is 2 to 3 years, and let's say that foreclosure is at least 3 years under underwriting guidelines and could be as much as 4 to 7 years, depending on the lender. And so when somebody says, how long will it take me to refinance my home, like you questioned or posed, or how long if I divest myself of the current home that I've got until I can buy another house, what they're really asking, whether they recognize it or not, is not necessarily credit, but underwriting guidelines related to qualifying for financing with those specific issues. So if you went to see a mortgage broker like Mike Overson, who was just on the radio show before us, and you said, look, I already know I can't qualify for a loan because of this particular issue, which may or may not be true, and I would want, somebody to tell me that. But if that was the case, then your next question would be, where am I deficient in the underwriting process? And he says, well, you got to have 3 years under your belt past this particular date. And then once you get past that date, you have to have 2 active trade lines with 24 months worth of active history on them. You have to have 3 years in your current occupation or the same occupation. You have to have a credit score of, you have to have a debt to income ratio of. And when he's telling you all of these underwriting guidelines, what he's really telling you is, here's exactly how you can morph yourself in to meeting those underwriting guidelines within 24, 36, 12 months, whatever the case may be. Okay. Once you know that, it's very simple. So for your bankruptcy, I'll tell you that how far are you past the discharge date of your bankruptcy? Was it a Chapter 7 or a Chapter 13?
It was a Chapter 7, and we did it 3 years ago, but we are still paying on the house right now. We're still living in the house.
Okay. And have you gotten behind, or are you current on the payments?
We are current on the payments, and that's what we were thinking about. It is just wondering if we just let it go and let them come in, or even did a short sale. Now, do we have to wait an additional, 7 months or whatever it is after the foreclosure or the short sale?
Yes. The simple answer is yes. All right. So let me say this: if you're getting a loan, and it depends on whether or not it is, we're talking about an FHA loan or we're talking about conventional financing, because they have different underwriting guidelines. And so with an FHA guideline, you're talking about 24 to 36 months, worst case scenario. And if you don't get a loan beyond that time, it isn't about the bankruptcy, it's about other things. Now, on the other hand, if you need a loan that is a jumbo loan, or you want a conventional loan, or the person that you're dealing with simply doesn't do FHA loans. Heck, if you went back before 2006, 2007, 90% of the loan origination shops here in the Twin Cities didn't even have one single person in-house who did FHA financing, because conventional financing covered the waterfront and nobody needed to do FHA loans. Today, FHA loans, probably half or more of the loans being done, because they're more accommodating when it comes to this stuff. But if your house and your situation lends itself to where you need to have conventional financing to get your loan done, well, then you've got an entirely different set of circumstances. Like, you may need to go 4 years past the discharge date of a bankruptcy. If the mortgage broker or mortgage banker says to me, you can't get a loan because of your bankruptcy, and you're 3 years past it, then I want to immediately say, how far past that do I need to be before I can get financing? And there, you just were told everything you needed to know about the bankruptcy. However, don't think that when that time elapses, that just simply means that you're going to get a loan, because your home may be upside down to the degree that the loan to value wouldn't allow you to get a loan regardless of that. And see, there's the problem. You'll ask that question and then travel along believing that when the next 12 months elapses, you're ready to get financing, financing, when in fact now you've got a whole other group or set of issues related to underwriting that you can't meet either. And this was a moot point. You probably should have divested yourself of the house.
Yep.
If you do get rid of the house, just know this. You're going to have to get rid of that house, and then the timeline related to short sale. And short sale, you're going to have to be at least 2 years and probably 3 years. And I could go into, mortgage companies like U.S. Bank that will do a loan the day after a short sale, provided you've not missed any payments. Problem, of course, is good luck getting a short sale done without missing a single payment. And even that bank in particular, you're going to have a heck of a time submitting a purchase agreement to do a short sale when there's a lot of deficiency if you haven't missed a single payment, because the reality is the bank has a performing loan, and consequently, why in the world should they approve a short sale when they're entirely happy with the current situation? So you're probably going to have to miss payments just to get their attention and get them to react to a short sale and a purchase agreement. And so by doing that, you've now beaten your credit up. And remember, short sale isn't on anybody's credit report. There's no such thing as a short sale on a credit report. What says on a credit report instead is settled for less than owed and settled for less than full balance. And when it's related to a trade line that is a real estate trade line by an underwriter for mortgage finance, that is considered a short sale. And while you may not have missed a payment, you believe that you're going to preserve your credit by doing a short sale and not missing a payment. It's totally wrong, because when it says short sale, meaning settled for less than owed, you know what? You're going to probably lose potentially 100 points on a credit score anyway. And I don't care what anybody else says, credit specialists or otherwise. I know that that's the truth. And so now it won't be about the fact that you had missed payments. It'll be about the fact that your credit score threshold is too low and you can't get a loan because of that. So when you divest yourself of this house, if you do a short sale, you should probably look at 3-year timeline before you can get financing. It won't be 7 months. It'll be 2 to 3 years, and I would use 3 years because the probability is, at least with current standards, it's going to be 3 years, not 2 years.
Is that still, though, even though our house was covered under the bankruptcy?
Absolutely it is. Absolutely. They're two completely separate issues. It's a different timeline altogether. And so once you go through a bankruptcy, you would think, well, if I discharge that obligation, then no longer will I have late payment history. Yet you'll still have a foreclosure or a short sale that'll hit your credit thereafter, and then that will be the timeline that the real estate or the underwriter for the mortgage financing will look at, and the length of time you'll have to be past that. So that's where that is. Okay. If you go through a foreclosure will be 3 years under FHA guidelines, could be 4 to 7 years for conventional financing. So that's why you need to know the ins and outs of all of those things. I'm going to let you go and go to break here, Bruce, but I encourage you to download the Financial Crisis Bible. Read some of the information, and as you're already figuring out, if you want to strategically plan to divest yourself, you're probably going to need to be a renter. The last show had a really good tenant manager on here. Ironically, in today's world, you may be better suited to be a renter for a period of time, gather your bearings while the market stabilizes, and then consequently come back and be a homeowner when you're at a more solid position, and actually will be in a better position than being a homeowner. But that's your decision at the end of the day. Understanding the underwriting guidelines and asking the mortgage broker who turned you down where you're deficient in the underwriting process will tell you exactly how long it'll take to recover and how to position yourself for future financing should you go through a short sale or a foreclosure by getting rid of your house. Does that answer your question, Bruce?
It sure does, Todd. Thank
Beautiful.
you very much.
All right. We'll go to break and we'll come right back. All right. We're back. Cover your assets. Talking about all the implications related